On today's show, Ben and I discuss Jerome Powell. Is he the greatest Fed chairman of all time, or did he just get a little bit lucky?
I'm going to make the analogy that the U.S. economy is like the time my friend in high school got a beer bottle broken over his head.
We go over the definitive list of best comedies of all time. An emailer asked us about that.
The ultimate conversation stopper. I'm not a big guy for small talk, but you say this one phrase and Michael and I are out.
Done.
See ya.
Lastly, we hit on the economics of martini. Hope you all enjoy the show. This episode of Animal Spirits is sponsored by Global X ETFs. Since 2008, Global X ETFs has been committed to empowering investors with unexplored and intelligent solutions.
Global X specializes in ETFs that track emerging trends like artificial intelligence, as well as strategies within the AI ecosystem, such as data centers, robotics, cloud computing, and more.
Visit globalxetfs.com to explore a lineup of more than 90 ETFs, along with insights to help navigate a dynamic investing landscape.
Welcome to Animal Spirits with Michael and Ben. You know, one of the things I've learned in the finance world is that you're constantly saying the same thing over and over again. And I'm sure there's times of us like repeating ourselves, but I think there's a reason for this. Because sometimes you just have to. Like, it doesn't seem like there's anything more to say about politics in investing than we said 4 years ago. But it feels like every 4 years we have to have the same conversation because people make the same mistakes over and over again. I'm already getting questions from people. Hey, listen, there's going to be volatility come November. I just know it. I'm going to change my portfolio. I'm going to get more conservative or more whatever it is. And it just feels like we have these same conversations every time there's an election. But I guess it's human nature, so we have to.
Yeah.
Right. I mean, like we're going to have a ton of good charts in the months ahead about politics and investing and why it doesn't really matter. My whole thing is just the stock market doesn't care who the president is. There's drawdowns. There's drawdowns with every president and there's upswings with every president. That's the thing. And so much of it is based on pure luck and chance. Like, do you think Clinton was a wonderful president for the economy? Or did he get lucky that the fact that boomers were spending a bunch of money in the 90s and the dot-com bubble happened?
Yeah.
Was Bush a bad president for the economy? Or did he just happen to have bad luck and come in after a 20-year bull market that was in a 30-year debt super cycle that was going to crash either way?
If there's a spectrum of who's in the White House matters a lot versus it literally doesn't matter at all, I'm more towards it literally doesn't matter at all. However, like it does, the president can impact certain sectors for sure, certain companies. I think that, but if you think that, and then like, oh, and then I can predict how it's going to, and I'm going to react based on what I think is going to happen. Well, yeah, you're going to get run over.
Yeah, obviously the president matters, their policies, but the whole thing, people have asked us, we've been getting questions for a few weeks now. Hey, what do you think about this policy? What do you think about this idea? And my whole point is always, what they say in their campaign is not really what's technically going to happen when they're in the White House. And because a lot of that matters who's controlling Congress, who's controlling the Senate, and also, are they just lying to us?
That's not possible.
And are they going to do what they say they're going to do? And how much of it is really, I think you could probably make the case that the president matters way more when there is a big calamity or crisis for the economy. But even then, a lot of it is just luck and timing and I don't know. So that's my whole thing is that it doesn't matter as much as you think it does. And if the president had the ability to control a $27 trillion economy, if they could make it do whatever they wanted to, they would, but they can't. That's
True.
That's the whole thing.
Agreed.
So we're going to have these conversations in the months ahead. Again, we're going to have the charts and we're going to provide the context, but it's repeating things we've already said before. And my biggest thing, and I think Barry was the first one to really have some good takes on this, is just that don't mix your investing in politics. Think of what you want about politics, all you want. I don't care. Do what you want to do. Don't bring it into your portfolio. How's that?
Yeah, like it.
Fair? Okay. So this one made the rounds a little bit from Sherwood and Charter on U.S. stocks have been chill in 2024. And you know it's a good chart when everyone who produces financial content just goes, oh, great chart.
Yeah, it's a great chart.
Right? Like just, that's all you need is, great chart. So they look at the daily returns in the S&P 500 by year going back to 2020. And 2020 is this huge wide range. And they show the daily returns as little dots. And the smaller the dot, the lower the return on an absolute basis. The bigger the dot, the bigger the return. And 2024 has been so clustered. There's been 2% move plus or minus this year, and it was an up day. No big moves in either direction. Takeaways.
Everyone knows there's an election in 2024. It's not going to catch anybody off guard. Now, it's not to say that there can't be volatility, that there won't be. But if you think that you're the only one who's worrying that there will be volatility, well, don't you think that, we know. It's literally on the calendar. We know it's coming. And yes. I think who has the best take on this was just in terms of let the market do the worrying for you. It's Bill Miller, right? I don't know what the exact quote is. We're going to paraphrase. The investors do plenty of worrying. And it's all in the market. And I'm just going to let the investors worry about it. I'm going to focus on things that I can control.
Yes. And the other thing that really is another pet peeve of mine is people say, well, listen, uncertainty is heightened right now, right? Uncertainty is at an all-time high. Uncertainty is always at an all-time high. I'm never certain about what's going to happen in the days, weeks, and months ahead. No one knows.
That's cute, but it's true.
That's
things a blogger says. I'm sorry, no offense. That's things a blogger says.
It's true. Because it's true.
No. You can measure uncertainty. Are things? So COVID was as equally as uncertain as any other day of the week.
Well, it literally came out of nowhere. That's my point.
You're moving the goalpost. You're moving the goalpost. Sometimes uncertainty is higher than at other times. That's just a fact. Come on.
It feels that way. But no one can ever predict the future.
The future is always unpredictable. But certain points have more uncertainty and more fear than other periods of time. That's because
you could make the case that a month ago uncertainty is at all-time highs based on what's happened in the past month politically. But the only reason people say uncertainty is that high because all these unprecedented things happened. They're looking in the rearview mirror and using that recency bias to say crazy stuff has happened, so now it's really uncertain in the future. It's always like that, though. That's the truth.
Nah. Well, no, it's not the truth. Agree with this.
Here's something I'm certain about. You're going to break your Achilles or break a knee or something playing men's basketball.
Watch your mouth. I don't like those bad jujus. But I did play basketball this weekend. I played 6 games in a row, which is far too many games in a row.
So you guys were balling. You kept winning?
We were 5-1, but I was on the old man court. Average age was probably, I don't know, 50 maybe, give or take. Some a little bit older, some a little bit younger. That's how average works.
So when I was growing up, we would play every single Sunday in high school and college at our little middle school gym where I went to middle school. And it was half young guys and half old guys. And I always really enjoyed playing with the cagey old guys.
Well, they know how to play basketball. They know how to play basketball. So I play Sunday and I play Monday nights. And Monday nights are with the dads my age. And there's a few of them are good, but there's a few that are really bad. And they don't know how to play basketball. So it makes the game really challenging. The older guys, they can't move as quick. They can't defend as well. But they know how to box out. They know how to position. They hit open shots. They move the ball. But anyway.
Yeah, you pass and you cut. That's exactly what old guys know how to do.
Even if the cut is in slow motion, they know where to go. They know the angles.
Yes.
One of the older guys, let's say he was 65 years old. So in game 5, I'm like, guys, I'm out of gas. Just, if you get an open shot, just let it fly. And they're like, what, you can't breathe this? I'm like, no, it's not like my breath. It's more my body, my back hurts. And they go, how old are you? And I said, well, how old do you think I am? And he goes, low 50s. And I go, ooh.
That hurt. In their defense, though, a bald man could be plus or minus 15 years.
And then also in
their defense, really hard to tell.
When you're 65, you don't know. You know what I mean? It's even if I was 50, I'm 15 years younger than him. So
everyone looks younger now than they are. Under a certain age, everyone under 50 probably right now
apparently
looks 10 years younger than people. Well, except for, but the bald thing hides it.
I did feel extremely old last week, 2 weeks ago, when I was walking in the East Village going to see Longlegs and just walking around. I guess it was 8:00 at night and kids are out and they looked considerably younger than we do.
Midlife crisis, man. You've been in it for a while.
It's coming.
Let's just admit it. All right. One of my favorite pieces of stock market research of the past few decades comes from Hendrik Bessenbinder. We've talked about it before. He did the Do Stocks Outperform Treasury Bills? And it's something like 4% of all stocks account for the vast majority of wealth created in the stock market over the long term. We've gone back and forth on this and said this,
it's great, but also very flawed.
Well, there's caveats to it that, most stocks don't make it that long. and there's plenty of stocks that do well in between and all this stuff.
But that's the biggest caveat. He's looking at from IPO. Now, it's valid. It's saying like, listen, most stocks don't generate a lifetime value that's worth investing in from the IPO. The thing is, though, that like there's a lot of opportunity in between the IPO and 70 years later to buy and sell stocks.
But I think his biggest point that I latch onto is just that it makes more sense to be diversified because you want to make sure that you have those winners in your portfolio in some capacity.
Well, he's making the case for index funds.
Yes, which is why I like it. So confirmation bias. But
yes.
But he has a new piece out about the biggest winners in the stock market. And he decided to take his research one step further and look at, okay, what were the companies that produced the biggest gains? And this is the craziest one to me, is that he looked at the cumulative returns. So he looked at the average cumulative return from 1926 to 2023. And to be fair, there was only 38 stocks that survived the entire 98-year period. But he also looked at other windows. He looked at 5 years, 10 years, 20 years, and then the whole overall period. And there were 17 stocks that had cumulative returns of 5 million %. So the average return of the accumulated return for stocks was like 23,000% over this time period. But the median, pick the middle one, was a loss of negative 7.4%. Meaning more than half the stocks in this group lost money over the long term. Which, to your point, there's failures. But the interesting thing was, like, the annual returns of the mega winners weren't these crazy Buffett or Jim Simons like numbers. They weren't 20, 30, 40% per year. The average returns of the biggest winners were 13.5% per year.
Just compounded over a zillion years.
It's just if you take 2 or 3% over the market, compounded over that long of a time horizon, it's really good return. So I put the list of the highest cumulative returns in here. And so Altria is the top one, and that had a 16.3% annual return. That made it the whole period.
This was Philip Morris?
Yes. So smoking pays, I guess, which is pretty extraordinary. So Exxon it's a lot of blue chip names, and I guess my takeaway here was these companies are blue chip for a reason because they survived that long, right? And so he also looked at any stock with minimum of 20 years of data, and Nvidia was the highest return in the data set at 33.4% per year. So Nvidia really is a once in a lifetime stock. It's the highest 20-year return of any stock in history in the U.S. stock market.
I saw somebody tweet a poll for Nvidia employees. What's your net worth? Did you see this?
No.
The buckets are less than $1 million, 1 to 3, 3 to 5, 5 to 10, 10 to 20, and over 20. And the highest percentage answer, 36.6% of respondents answered over $20 million.
Holy cow. So remember the stories you'd hear about? There was a secretary at Microsoft in the 80s who's worth $100 million because she got stock options early or something. Here's my question about this.
So wait, hold on. So let's say 38. So more than 60% of NVIDIA employees are worth more than $3 million, have a net worth of more than $3 million.
Wow. So how do you keep these employees motivated going forward? They're already rich. Is that NVIDIA's downfall? That just
no. Whoa. What about like the vesting schedule and the restricted nature of these stock units? Like,
true, they can't spend it yet.
Yeah,
but you got to be sure a lot of these people are borrowing against that stock, right? I would be.
What would you be buying?
A house? I don't know. Don't you think these young tech people they have to buy a $3 million studio apartment in San Francisco?
I'm sure there's a lot of that going on, I would imagine.
Yeah, that is pretty wild, though. All right, so I have a theory about the U.S. economy I want to run by you. And I think it's kind of like the Fed. Like, did the Fed get lucky? I think Jeremy Siegel put it very eloquently with you and Josh a few weeks ago about, like, is this the greatest Fed in history, or did they get kind of lucky? And you could say it's a little bit of both, but I think I'm leaning more towards the luck side.
No. I don't think you could say that they're the greatest Fed in history.
No, I wouldn't. True. Okay, so I wouldn't even go that far. Yeah, I would say that they've done a pretty good job, but I think they got really, really lucky. And I don't know why I equated this. Maybe this is a total non sequitur, and I just wanted to tell this story. But we were at a party one time in high school or college, and a bunch of people, and someone got shoved or whatever. And I had a friend this really big, stocky guy. And you know how some people just have a very punchable face?
Sure.
Just like, you're like, oh, that person probably gets in a lot of fights. Probably, you know. My friend had this, and he got into a number of fights, and it wasn't like he was a bad guy. Just it happened.
He had the face.
Yeah. And there was pushing and shoving, and he was trying to break it up. And some guy comes from behind and tries to break a beer bottle over his head. This thing, like, it's like the Ron Burgundy. Whoa, that escalated quickly. And the beer bottle didn't break. It careened off of his head, which probably hurts more. You know, like, ding. And so he just kind of went, ow, you know. But then the guy with the beer bottle in his hand was way that my friend was a pretty big guy, was like, oh crap, and like ran away because he realized I didn't take this giant down. And I think that's the US economy. Like the US economy got hit with a beer bottle in the head, but the bottle didn't break. And I think the reason for that is kind of well known at this point. The corporations locked in low rates and households locked in low rates. And so Torsten Slok has these great charts I sent to you and Josh. He says a record high 30% of the population has a stock market portfolio worth more than $500,000. 37% of the population has a home worth more than $500,000. Survey results, take it with a grain of salt, obviously. These numbers are probably directional. Regardless, there's never been a point in history when people have had more wealth tied up in their home or the stock market.
Especially after a Fed hiking cycle.
Yes, which is the point, which is like, how is that possible? But someone did send us this Wall Street Journal article, and they said it's called American Borrowers on Shakier Ground. These charts show why. And they show some, so it's kind of like eventually people had to start borrowing money and buying houses and buying cars, and they're taking 8 to 10% auto loans, and they're taking 7% mortgages. And so that had to filter through to some households eventually. Everyone wasn't just going to stay put forever. So they show interest paid on U.S. consumer debt, percentage change from a year earlier, and it's mortgage debt versus non-mortgage debt. And mortgage debt is up 15% or something, which makes sense. But interest paid on non-mortgage debt is up 50% year over year, which is crazy. And I don't know how much of this is credit card versus auto loan, but that's a huge jump higher, obviously.
Yeah, monster. Auto and credit, I think, are the two big ones. And
they show that the total average credit card balance was $6,000 in the first quarter, which seems like it's actually been pretty steady for the past 5 to 7 years. That 6,000 number is one I see a lot. And they show the minimum payment for $6,200 credit card balance at different rates. And they go 15, 22, and 29. And it goes from, I don't know, $130 to $200-something if you're just making the minimum payment. So it's a big difference. My one caveat here would be, if you're making minimum payments on a credit card balance, that's probably like the worst financial decision you can make. So I don't know how many people actually do that, but if you do that, that's pretty bad. I would say that even with some of these things ticking higher and not looking great, I would still not be worried about the consumer yet. Like, there's going to come a point where there's a recession and consumer will retrench and people lose jobs and these numbers will get worse. But if you look at all the other numbers, the balance of 90-day plus delinquent by loan type, credit cards are going up a little bit. Auto loans are going up a little bit. Everything else seems fine to me, especially historically. They also show that
it's earnings season, and we're going to hear all about the consumer. And so far, you keep hearing the words resilient.
Yeah. So even though there's some households on the fringe, I'm sure, that are being really impacted by higher prices.
Oh, how about retail sales? Retail sales doesn't look bad at all.
No. And here's one of the things. So they show excess savings, and they say the top 10 households by income, or those earning like $245,000 or more, hold more than 3/4 of excess savings. And they're saying, well, excess savings has been depleted for most Americans. I never heard about excess savings until the pandemic. This was never a data point. I don't know why we have to care about it. Why should it be a thing? We never had to worry about excess savings before. Just worry about savings.
Yeah.
Right. So the excess saving thing doesn't.
Well, that's a great point. What is the excess? How do they measure the excess? Is that like a normal level of savings, and this is what's above trend?
Well, it was taking a trend from pre-pandemic days, and then we went way above that trend. Now people spend it down. It's like time to worry. I don't know. We never talked about excess savings before. Here's another interesting one to me. So I looked at total U.S. household debt and plotted the change against CPI going back to 2019. Household debt is up 25%, and the reason this line stops a little early is because it goes through like the fourth quarter, so it's not updated yet. Maybe the first quarter. So household debt is up 25% since the start of the pandemic, and CPI is up 21%. So on a real basis, household debt in the last 5 years is up 4% on a real basis. That doesn't really worry me that much. That's not a huge number. Like, it's not like people gorged on debt even when they probably could or should have when rates were so low.
National government debt.
Well, yes. It just so happens the government can print their own money.
So Elon is tweeting that the United States is bankrupt.
Yes. Sometimes I can't. He has to be doing this stuff on purpose. There's no other explanation. He's not that dumb.
So
he's a smart guy.
On Sunday, when Biden dropped out, I was driving home and just seeing I was driving through Long Beach and people all over the place, and I think like most people just don't care. Like Twitter is just so warped, and the news and like the country is being torn apart. And I'm not saying things are good. Like I see what's going on and it's not great, but I think that outside of the people that like really care, the people that attend the rallies on both sides of the political spectrum, I think most people are just like go about their life.
Yes. You know what I was doing when I found out the news that Biden was dropping out? I was kayaking with my kids. I came back and my wife goes, "Hey, did you see Biden dropped out?" I said, "No, I didn't. I was out on the water. And all these other people were doing the same thing, probably not paying attention." Right? Yes, I totally agree. The people who pay attention think it's everything that's happening tick by tick basis is the most important thing that's ever happened in the world. And everyone else is just out there living their lives.
Yeah.
I agree with that. All right, Chart Kid Matt created this for me. I wanted to see.
Wait, what are we looking at? Which chart?
Oh, go to inflation.
Okay.
I've already made my case in the consumer. The other chart we had was household debt as a share of household net worth. I think this is from Bank of America.
Periods of rapid disinflation. It should say, you forgot a grand.
What do you mean?
It should say grand rapid disinflation.
Okay. Okay. I see it. So I said this has to be over a period of 12 months, one of the quickest dives we've had in inflation rate ever. We went from 9% to 3% in a pretty quick period. So he went back and looked at it, going back to the 1920s for me. And it was basically the 80s is the last time this happened. It went from 9.8 to 3.5, around 6%.
You're looking at that at a 2-year change.
Right. 2-year change. And was it a recession or no? And this happened all the time in the 30s and 40s and 50s because inflation was so much more volatile. And it just hasn't happened in so long. So this is actually, historically, this kind of thing happens a lot, but it hasn't happened in a very long time. It's been over 40 years since the 80s since this happened, and probably because we haven't had inflation high enough to warrant a drop like that.
I'm kind of surprised there's as many no's in the recession column. Now, again, a lot of this data is from like the 50s and 40s and 30s, so I'm not sure how applicable that economy was to today.
Some of it is on I had him look at, but some of it on like the 70s. 1976 was recession on a lag, basically. Like there was that recession in 73, 74, and then inflation fell from there. So close enough, but this was like kind of a historic disinflationary period that we've lived through. It happened really, really fast.
Mm-hmm.
And is this disinflation sticky? This is from Bloomberg. McDonald's to extend $5
By the way,
meal deal.
that was very TV anchory. Because for those who are listening, is this inflation sticky? And then did like a point, like a finger point to the camera.
That's a pro right there. McDonald's to extend $5 meal deal citing customer traffic. It is so funny that I mean, I don't know. I was the one who was lightly pounding the table on the corporate greed thing, but corporations are going to do whatever's best for them.
Lightly pounding the table.
Yeah, I wasn't pounding it. I was tapping it. I was tapping the table. So this is funny though. They're going to do what the customers tell them more or less, and they learn. Like, listen, we pushed prices too high, and now it's like, wait, we can go back to volume now.
Yeah,
and this is what corporations do.
Yeah, very successfully, I might add.
Have you got the $5 meal deal yet?
I don't need McDonald's anymore unless I'm in an airport. Because if I'm on the road on a road trip and I'm in the mood for fast food, I'm going a spicy chicken sandwich from Wendy's every single time. If I'm in an airport, I just don't eat McDonald's that often. I eat my kids McDonald's. That's what I do. I eat their chicken nuggets.
Yeah, my kids love McDonald's.
Well, who doesn't? It's great.
All right, Ernie Tedeschi has he worked for the White House economic team, and now he's got a Substack called The Briefing Book. And remember a couple weeks ago we talked about how there's really only been 2 periods in the last 50 years of wage increases for people? Because like in the late 80s, 90s, it didn't really happen. And he looked at low wage workers have only seen 2 periods of sustained real growth in the last 45 years. So I guess this kind of matches up. But it was the late 90s to early 2000s. And then we had So from 1980 to 1996 or so, we had stagnation in wages for low-wage workers. Then it took off. Then we had stagnation again until mid-2020s. And now it took off again in the last 10 years or so. Looks like the biggest jump that we've seen in the last 50.
Wow. It's weird. This started in like the mid-2010s. I feel like you didn't hear about it until after the pandemic, right?
It is funny to think about the fact that income inequality was one of the biggest economic sticking points in the 2010s.
There was a book about the CEO pay gap.
Oh, yeah. And we didn't beat income inequality. It's still a thing, but it's improved so substantially, and everyone's kind of like, okay, whatever. Also, one other thing.
It doesn't get celebrated enough.
One of the readers, I guess people celebrate bad news more than good news now. One of the readers pointed out in our inbox that, remember we said, well, how come people weren't more miserable in the 80s? If wages were stagnant on a real basis in the 80s, why is it looked at as this economic boom period? And the point they made was, listen, the boomers were moving up the income ladder. They weren't stuck in the same wage class. Which probably
Russ Roberts
did that piece.
Yeah, excellent.
And that is a good point that people miss a lot of times when they look at different wage buckets. Is the fact that people don't stay in the same wage bucket their whole life or their whole career. They change and they move. So that was a good point.
So yeah, Ben's saying if you looked at the 25th percentile and it flatlined over a 10-year period, that's missing the huge detail that people are moving in and out. Yes. Hopefully up and out.
Yes, and I'm sure most boomers did move up in the 1980s. That's the point.
Somebody sent us an article, The Economics of Martini. We've been over the martini and the glass and the deliverable, and we won't belabor the point that Ben is wrong about how good a martini is with the long stem.
Well, no, you can't show the economics of a martini without showing the psychic income of drinking it out of that glass.
Well, this is from the business owner's point of view.
Okay.
All right. So in New York City, assuming
does this mean the average price of a martini is $20 in New York City, or is that just an assumption?
Sounds about right. So they break it down by labor, OpEx, ingredients, rent, liability, insurance, credit card fees, and what's left over is not great. It's $1. Even in Charleston, the profit margins are a little bit higher. Do I what?
I'm constantly looking at food establishments where there's dining or grocery stores or whatever, and I'm constantly thinking, how do these places make money?
They don't.
The margins have to be so thin. I feel like God bless the people that run these establishments. I think a lot of them do it for the love of the game, but it's got to be such a difficult business to work in.
It is. Robin and I, when we're driving on Merrick Road, we always look at stores and we're like, how does that place make money? And I always say, my answer is always, they don't. Just because somebody has a storefront with a business doesn't mean they're making $1 million. They're probably not doing very well at all. These businesses are really difficult to run. Yeah.
So the way you get around it is you launder money for the mob. That's how you make money.
Yes. Very profitable.
Okay. So it's a higher profit margin in Charleston than it is in New York.
Yeah.
Plus Charleston has way better views too.
Good views.
Behind the scenes, Michael and I sometimes discuss the doc in between tangents we go on here. And I said, do you want to discuss the ETH ETF? And Michael said, nah. And is that going to be the investor response to this ETF? Right, is it going to be underwhelming that people kind of go, we already had the big fanfare with a Bitcoin ETF. Is the ETH ETF going to be kind of a shoulder shrug?
Okay. That has less to do with my feelings about the ETH launch and more to do with the fact that we have Matt Hogan on TCAF on Thursday.
Ah, okay. But you and I have talked about this many times that it's not as easy to sell it, right? So I was watching Presumed Innocent this week. I think I'm almost caught up. I'm on episode 6. Still a pretty good show. And they talked about how when you're trying a court case, best story wins. That's what they said.
They stole that. I think they stole that directly from Morgan Housel.
That's possible. So they said best story wins when in the court case. And they're talking about the whole thing about it's all narrative driven and how do you sell yourself. And that's the thing, I guess, that the Ethereum ETF, it's not as easy as just saying Bitcoin is digital gold.
Right.
That's an easy sell for a lot of people.
Yeah.
So people in the crypto space could go, no, you idiots. Ethereum is way better than Bitcoin because you can do this, that, and this. And it's programmable money. But that kind of thing goes over most people's heads, I feel like.
Yeah.
So I'll be interested. Maybe I was wrong on the Bitcoin ETF in terms of popularity. So maybe I'll be wrong about this too.
I will say
but I think that could be tough.
I saw a tweet this morning that BlackRock's Bitcoin ETF generated more year-to-date inflows than the Qs. That is insane.
That is surprising.
Considering how strong the Qs have been this year.
Yeah. That's pretty good.
Pretty wild. Okay, this surprised me. Share of households planning to move over the next 12 months has skyrocketed. I mean, I'm guessing this is in anticipation of rate cuts, but it's a big jump. 18% of people, down, up from 14%.
There's cash on the sidelines in the housing market. I do think that if we get to like a 5% mortgage rate, there would be an unlock of demand. I don't know if it's just one initial burst, but I'm sure there's so many people who are just like, I'm waiting till we get to better mortgage rates, and then I'm going.
I think you can make the case that there'll be a bigger unlock of supply. We
talked about this though before. Remember?
Did. Yeah.
It depends how many new household formation there is, and all this stuff. Total housing. This is from Torsten Slok, who did the housing update. I just love how this guy. He tells it. Speaking of telling a story, it's all charts basically. Every once in a while, he'll give a little 2 or 3 sentence summary, but mostly he just lets the charts tell the story. Total housing inventory per person is at or near. It's total housing units divided by number of households. It's very, very low, and maybe going up a little bit, but there's still a lot of room for this to run. And he's saying that like the demographics are going to be the thing, and that's maybe you think supply. I'm in the demand camp just because of this U.S. population by age and.
No, my only point was I think the people that wanted to buy a house, like, were more eager to buy than sellers were eager to sell. Right? Like the sellers just can't make the justification for selling a 3% mortgage and go up to 7%. But if you're a new home buyer, you need to buy a house.
Okay, that's fair.
That's my point. But I think that this chart, the demographics are tailwind to housing, which the chart shows that the most people in the United States are 33 years old, like by age. And this should put a pretty high floor on the housing prices, like regardless of what happens.
Yes. I'm still in the camp that you're going to have to wait till the 2030s to see some housing, like big time weakness if the boomers decide to sell, which is not a guarantee. Or COVID-20 hits. No, but that'd be a boom in the housing market again.
We spoke about this a few minutes ago, but Noah Smith had a chart in here showing the ratio of the 75th to 25th percentile of weekly earners, so the spread between the two groups, and it's collapsing. He said the wage inequality between the American working class and the American upper middle class that appeared in the 1980s has completely collapsed over the past decade. A chart that should be celebrated that isn't.
Do you also think this is why people in the upper class are a little cranky?
Yes. This is why the middle class especially feels like they're not making progress. And I get that too. Yes.
Because what happened following the 1970s is you had the middle class broke up a little bit, but you had more people going to the upper class, which was a positive, but you also had a few more people going to the lower class. And now the lower class is coming up more than the upper and the middle. And yeah, I'm sure that part of it because we think on a relative basis.
Well, and guess who employs lower class? Upper middle class.
Right.
So True. It's a double whammy. Yeah,
that's true.
All right, this survey surprised me. From Bank of America via the Daily Chart Book, the percentage of fund manager survey investors expecting a stronger global economy over the next 12 months fell by the largest amount since March 22, driven by the most negative U.S. outlook since December. I'm not really sure what to make of this. Maybe it's just noise.
It does go up a lot, up and down a lot, doesn't it? It's funny. Howard Marks, in his latest letter, first one of his I've read in a while, but he showed the 40-year volatility of economic growth, dividends in the stock market. And the whole thing is the economy, the standard deviation was like 1% or something. And the stock market is 13 to 15 or something. And people think that the economy moves like the stock market, and it does not.
Yeah, it doesn't.
There's not that much volatility in it. Okay, a bunch of people sent us this. University of Michigan does the sentiment indicators, and they do it by surveys. And we've always made it clear. The reason we're an anti-survey podcast is not because we don't get how sampling works or surveys. We think they're important, but the way that they're conducted has a big bearing on the outcome. And they showed how they changed some of because people stopped answering their phones. which this is how old I am. I remember when my first friend got caller ID, and it was a little box that you placed next to the phone and plugged into the phone. And it was like we were, I don't know, freshmen in high school. And it was the craziest thing in the world. Like, you can see who's calling you. It's nuts. So, of course, no one answers their phone anymore. So they started changing these surveys to online. So they showed that expectations of inflation of 15% or more have skyrocketed. And it's like, why would people think there's more inflation of 15%? That's crazy. And they said in recent months, elevated level of mean long-run expectations have been amplified by methodological, did I say that right?
Nope.
Methodological transition from phone to web interviewing that began in April 2024 because respondents on web interviews are consistently more willing to report extremely high expectations than on phone interviews. So they're saying people are crazier with their answers on the internet than they are on the phone. People are more reasonable if you talk to them on the phone. They're more unreasonable on the internet. And there's just so many different ways you could take this stuff.
Yeah. But this is the whole kit and caboodle.
It is almost like sometimes people think the internet is a fake life. Like the stuff you'd say to someone, Louis C.K. had this joke, the stuff you say to someone in your car or on the internet, you would never say it to their face.
It's a warped version of reality.
Yes. I think that, but anyway, this is one of the reasons that you can't, because I don't think the people saying these answers even believe it in most cases. Right?
Yeah, they're just clicking buttons.
All right, from the Wall Street Journal. The Internal Revenue Service has made it easier to take a limited amount of money out of a traditional retirement account penalty-free. While previously you could tap your savings without penalty in more limited ways, and often with more paperwork, you can now take up to $1,000 of your funds for any self-defined emergency. You still owe income tax if you take it out and don't pay it back. So it'll be like a loan. I don't like this. I'm against it. I think they should make it harder for people to take out of their retirement accounts.
Yeah, not good.
I think if you make up your own emergencies, I don't think it's a good thing.
I agree. Don't like it. Not for it.
All right.
Let's talk about streaming. Last week, Netflix reported earnings. Alex Morris at The Science of Hitting does great work on this company. He's showing the trailing 12-month paid net ads.
Wait, before we get into this, do you still own this stock? I don't remember.
I do.
Because you famously caught the bottom of this one.
I do. You know what stock I sold? Thank goodness. We're going to talk about this in a little bit. I sold Disney a couple of weeks ago. I think maybe in like the hundreds or something after the gap lower.
I probably should. So Netflix was down 76% at the lows, and that was in spring of 2022. So a little bit more than 2 years later, last week it took out the highs again.
This is a great example of stocks being very connected to fundamentals. Look at this chart showing the 12-month net paid ads. It cratered. They were actually going through it. And
you could say that Netflix deserved, maybe 80% of a drawdown is too much, but they deserved to fall a lot.
Oh, no, they definitely did. They lost subscribers. They got super complacent. And look at their annual EBIT margins expanding as well. So the company is firing on all cylinders, and now effectively they're the winner. I mean, Warner Brothers is in complete disarray. There's rumors circulating about what Zaslav is going to do with the company. Paramount got sold, but a horrible exit by any stretch for existing investors. Disney is in the shitter big time. And then it's Netflix and YouTube. Those are the two ones. So Lucas Shaw wrote on Bloomberg this week, their quarterly profit rose 44% year over year and is up more than sevenfold from 2019. They've got 277 million subscribers. They reach more than 600 million people around the globe. And they show the Nielsen ratings of the top 10 shows, and it's Netflix and everything else. I mean, Netflix has 33 billion hours spent on the top 10 shows, and Disney is number 2. It's 5.3 billion hours. So not even close. In the same article, he wrote about Apple struggles and how Apple is trying to reel in some of the spending that they've done, because they really, they didn't have a ton of hit shows. They've had good shows, right? We Love Severance. They've had some other shows that people really enjoy.
I've made the case that Apple is starting to slowly but surely become HBO.
But it's not. No,
it's very high quality. But no one watches it.
No, but they're not doing that anymore. Like that trajectory that they've been on is going to change because.
Well, what they need to do is just stop doing the morning show. They spend so much money in the morning show, and that show is awful.
So
just
cut
the morning show salaries, and you're fine.
Ted Lasso is really is really their only like hit, right? That like
it sounds like Presumed Innocent is a little bit now too.
Presumed Innocent is great. So its streaming service is attracting just 0.2% of TV viewing in the US. Apple TV Plus generates less viewing in 1 month than Netflix does in 1 day.
Oof.
So it's showing that Apple is going to be canceling its original series more quickly now than they have in the past. There was a report that they're spending $20 million an episode on the new Severance season.
Whoa. Huh.
$20 million an episode? How is it even possible?
Big paycheck for Ben Stiller? I don't know.
Anyway, Netflix won. Game over. And that's that.
All right. Getting back to our survey thing about are people really answering correctly? So I think I've talked about this before. This David Blanchflower guy did this research about David Blanchflower. He did this research on the U-shape of happiness. So you're really happy early in life, goes down, middle age, you bottom out middle age. That's why they have the midlife crisis. Then as you get older and you age again, you become happier. It's this U-shaped. And he said, but not anymore. Now young adults on average are the least happy people. Unhappiness now declines with age, and happiness now rises with age. And this change seems to have started around 2017. The prime age are happier than the young. So the whole point is, people always say that like your best days are high school and college. Like that's your happiest. And for me, I had a wonderful, I know there's some people who did not like their high school and college days. I loved it. I was very happy then. And my point here is, are we sure young people are this unhappy?
Yeah.
Or do they just say they're unhappy?
I think they're unhappy. I think it's much harder to be a child today than it was when we were growing up. Way harder.
I agree it is. The social media and the internet and paying attention to stuff is harder.
Think about how bad it felt. Like, were you ever like left out or your friends didn't invite you to anything? Or you were just like home bored? Like it sucked, but it wasn't in your face. Now you see where everybody is. It's way more difficult.
Yeah. No, I get it. I've said it a million times. I'm so glad that cell phone cameras did not exist when I was in college.
Yeah.
Because it changes the way you think and act and behave, and your life shouldn't be in a fishbowl when you're that young and stupid.
Yeah. Ben, somebody left a comment. Ben has a target date fund of boats. That's pretty good.
That is good. A pontoon is...
we got an email. The subject line is Honking Etiquette. Need to know the appropriate honkage for the following scenario. 3 lanes at an intersection. Left lane is a turn-only lane that stays red while the other 2 lanes are free to drive straight. All right, so left turn lane, 2 to drive straight, tracking. So there's already a line of cars in the left turning lane, but some jabroni forgot he had to turn, so he's just waiting in the middle lane, blocking traffic with his left flasher. So now the middle lane is jammed. Nobody can drive straight because of one selfish asshole. It gave him the longest mother of all honks when I drove by. Deserved.
Definitely.
This person, you don't stay in the middle lane, wait for the light to turn. Guess what? You're shit out of luck. Too bad. You missed it. You drive straight.
Yeah, you go past.
You drive straight and you wait for a U-turn. This is clear.
Yes. And you can't hold up everyone else because you missed your turn. Totally agree. All right, this is interesting. Also from Charter, the box office versus video game spending. For every $1 spent at the box office in 2023, Americans spend $6.43 on video games. So it's saying 2023 spending on the box office is $8.9 billion. Spending on video games is $57.2 billion.
Wow.
Just not even close. You're the only one keeping the theaters alive, my friend.
Doing my part. All right, Ben, we've got a new segment. This used to be in our random segment mashed up with listener emails, but this is the part of the show that people seem to respond the most to. So we're gonna give it its own segment officially, and hopefully people enjoy it. The formality.
Time to the Google Doc in a while.
Yeah, it's called Story Time. So here we go. A few stories from Michael from the previous week. Robin is off for the summer. She's a guidance counselor. So
how does that change? How does that change your day to day? Because you work from home mostly.
You know, I like having her around. It's fun. We banter, we laugh, say, "What are you doing?" Nothing. Do something. I'm on vacation. It's fun. So she's cleaning out the closets, and we're going through the closet in my office, which she took everything out, didn't put anything away. So now it's just a bomb exploded in my office. But that's neither here nor there. She was keeping old laptops. I'm not even sure why. Not even like the old like HP or Dell laptops, like the Apple ones. And these were probably from college, so we're old. I don't know, call it 15, 17 years ago. They were heavy. Like actually heavy.
Remember when laptops used to have a CD-ROM drive in a laptop? I had a laptop with a CD-ROM drive.
So if laptops used to be so inefficient, remember they used to have I don't think the Apples had this, but they used to have like the little like rubber red like button. It would look like a pencil eraser, and now it's like the mouse.
Yeah.
We've come a long way.
That's true. My friend, the first laptop I ever saw in college, it was like a Bible thickness. It was huge, and it couldn't do anything.
Yeah. So it was not a laptop. I'm saying like it was too heavy for your lap. We probably just used it on the desk.
True. Yes.
All right, Ben. Is this not the ultimate conversation ender? So I'm at the kids had like visiting day for their it wasn't sleepaway camp. At least we don't go to sleepaway camp yet. Day camp. So the parents come and they see, they watch them do activities. And I saw a kid that I grew up with, who I've seen around town. And I said, "Hey, what's going on, man?" And his response was, "Living the dream."
Ooh.
And I know he wasn't trying to be anything other than whatever, but it's just like, it's the ultimate. I'm like, all right, see ya. Right? That's like the ultimate conversation ender. Not that I was looking to have small talk, but that's really like, don't talk to me. Like, hey, good to see you. I'm good. You're good. Let's just keep it moving.
Yes. It's a good way to vet people out of your life.
That's the keep it moving, buddy.
That's also secretly, I secretly hate myself and I hate my life.
Yeah. I feel like you should actually adopt that since you don't like small talk. That'd be good for you.
Oh, that's true. Live the dream, but then you get the living the dream guys they're on board with you. Oh, you're living the dream guy? Me too.
I'm also living the dream. Tell me about it. Tell me about your dream. All right, this is awkward. You ever been in the situation where you tell somebody like, "Oh, what are you watching? What are you watching? Oh, don't you love? Isn't it so good?" And they're like, "Oh, really? We don't like it." So yes. I was talking to a couple at the beach, and the particular topic at hand was House of the Dragon. Like, how good is it? How great is the season? They're like, really? No, we think it's kind of boring. And then you're like, "Oh yeah, no, I see that."
Can I? Excuse me. Can I actually offer my one detraction from House of the Dragon this season? I like it. Here's my only problem: Daemon Targaryen, the guy who played Prince Philip in The Crown.
I didn't watch The Crown, but I know Daemon.
Okay, so he reminds me of the same character, but I feel like they have him sitting in the corner shooting threes. They got to let him cook. You know what? It never works for me in a TV or movie. Dream sequences.
Yeah, I don't like it.
It's a crutch. The show is great, but he was one of my favorite characters in the first season. I'm sure they're going to bring him out in the end of the season with a dragon, but he's in this musty old cabin having dream sequences. Let him cook.
You really hate dreams, huh?
The dream sequence never works. They did it on Sopranos. There's never been a good dream sequence in any show or movie ever that's helped move the plot along.
I actually think that's a pretty good take.
It's a crutch for.
There's got to be some good ones in there. You know what comes to my brain with dream sequence? This is just random and did not move the plot along, to your point. Remember the scene in Jurassic Park 2 where Dr. Grant is on the airplane and he opens his eyes and there's a velociraptor sitting next to him or something? Completely forgettable. Why did that happen?
Exactly. Well, it doesn't move the plot along at all. All right, great email here. First time, long time. Love the show. Need your input on a debate.
Wait, I wasn't done.
Having it. Oh, you got more story time? All right, what do you got?
Excuse me. I've got, this week was particularly chock full of stories. Let me tell you about my experience at the Foo Fighters concert. Do you have a minute?
Right.
Do you have a minute?
Yes. You called me on the way and said you forgot your AirPods and you literally went home to get your AirPods because you couldn't stand a train ride without them.
It was 70 minutes. I'm not doing 70 minutes with no AirPods. Okay. So I enjoy concerts, but there's a big caveat. So Dave Grohl and the Foo Fighters, they rock pretty hard, right? But
that's a great show.
It was great. But there was a few songs that are quieter. It's more like intermission. You see people scurrying away, go to the bathroom. And let's just say I wasn't exactly 100% sober, right? So I'm feeling some sort of way. But he plays a song that goes a little bit soft. And dude, I look to my left and the guy is singing very emotionally. And I think there was a tear rolled down his cheek. I'm like, I got to get out of here. This is too much. I can't take it.
It had emotional meaning to him.
Yeah, sometimes it gets weird with your surroundings when people are behaving in a way that makes you uncomfortable.
Yeah, I can see that.
So I got an F pack, a fanny pack. You've seen me wearing
I've been wearing one a lot lately. Yeah.
So when you go to a place like a concert, so normally I carry my backpack to work, but if I've got my phone case charger, my phone, sunglass case, this, that, or the other thing. I don't have 6 pockets. So I'm carrying around my
Kind of surprised you're not a cargo short guy.
I mean, that's ridiculous. That defeats the purpose. I don't want things pounding on my knees when I walk. Over the shoulder F-pack. So it was like the sun went down, so it was dark. That's what happens when the sun goes down. And I sat in the wrong section, one section over. I'm looking around like, this doesn't look right. So I get up and I realize I'm in the wrong section. I go to the right section and I do the thing where I'm like, oh shit, I'm checking my pockets. I look at my fanny pack. I don't have my phone. I lost my phone. I brought a fanny pack and I still lost my phone. How the hell is that possible? So I'm thinking to myself, well, all right, it's over. I lost my phone. I can't go into a different section and start crawling on the floor looking for my phone, right?
Excuse me.
Yeah, no, I'm like, no, it sucks. Like, all right, I lost my phone. I guess that's just is what it is. I didn't lose my phone. It dropped out of my pocket under my seat in my existing section.
You definitely panic though when that phone's gone, don't you?
I panicked. Yeah, I definitely had dark thoughts of, all right, I guess this is happening now.
It's a panicky feeling.
All right, Ben, on to the emails.
Need your input into a debate I found myself hanging out at a bar recently. What's your age cohort's generational comedy? That is a funny movie that defined you as you were growing up. Must be highly quotable. Always watch on television. Something that came in your life at an impressionable years of approximately 12 to 22. And so he says, I'm 35. Here's my definitive list in order. Wedding Crashers, Old School,
Wait,
Hangover,
hold.
Anchorman.
Sorry. So he's 35 years old. So
Yes.
he was 15 in 2004.
You know what's scary to me? Old School came out when I was still in college. That's like an old movie now.
What year was Old School? 98?
No, Old School was like 2001 or 2002.
Oh yeah, that's right. I was in college too. Okay. All right. So this person was 15 in 2004.
So these are his generational comedies for a 35-year-old. Wedding Crashers, Old School, The Hangover, Anchorman, and Superbad. Now I will say,
great list.
For the 2000s, this is my definitive list too. I think it drops off after 5. I would quibble with the order. Hangover, Anchorman are 1A and 1B to me, but these 5 are unequivocally the list of the best comedies of the century.
40-Year-Old Virgin.
Good, but doesn't these 5 to me are it. I don't think you can break through this list. There's some good ones.
Knocked Up. It's close.
Yeah, I just don't think it breaks. So here's I did this list. I put a lot of time and effort into this. So again, those are so I did it by decade. 1980s. This is personal to me, not best comedies. These are my favorites. Christmas Vacation or Vacation. I think those are interchangeable, but if I had to pick one, I'd do Christmas Vacation. Uncle Buck. One of my most rewatched movies of all time. I'm a big John Candy guy. My friends and I would quote that movie all the time growing up. Beverly Hills Cop.
Wait, what's best quote from Uncle Buck?
You should have seen the toast. I couldn't get it through the door. I don't know.
You should have seen the what?
Should have seen the toast. I couldn't get it through the door. Remember he makes the pancakes with the shovel?
I don't know if I might have seen Uncle Buck when I was a kid. I have no memory of it.
Okay. No, the best line is when he's talking to the principal and she's got the big mole on her face. Hi, Molly Russell's wart? No? Okay. Beverly Hills Cop and Coming to America. So I guess I got 2 Eddie Murphys on there, but these are just me. 1990s.
Hang on. What about The Naked Gun?
I liked Naked Gun. I don't think it defined it just wasn't one of my defining.
Naked Gun is in my Hall of Fame. Also, oh my God. Why am I drawing so many blanks on movies these days? I'm getting very old. Well, Trading Places.
Okay, that's another good one. Another Eddie Murphy one. He defined the 80s, I guess. 1990s, I got Dumb and Dumber, Austin Powers, Office Space, There's Something About Mary, and Tommy Boy.
Dumb and Dumber. Okay.
Dumb and Dumber has to be on any list.
I would add, I mean, this is not going to surprise you. I would add Wade's World.
Okay, that is one of your favorites.
Billy Madison and Happy Gilmore?
Oh, Happy Gilmore was pretty close, probably. That's a good one.
You know what? It was one of my favorites, probably irrationally so, but Hot Shots.
I did. Funny thing is, I watched Hot Shots more than Naked Gun, probably.
Yeah, Hot Shots was
similar
definitely
kind of movie.
My Hall of Fame.
I mean, it stole from Naked Gun, obviously, a little too. So that's what I got. Any other ones I missed for you? Generationally, comedies growing up?
I'm sure we missed a bunch, but those...
Good question. I was doing the guy on the wall with the string. That was me trying to come up with these lists. It's a hard list. All right. Speaking of heavy laptops, I watched Notting Hill this past weekend. One of my all-time favorite rom-coms. One of the better rom-coms there is. And your laptop heavy thing, they were watching a movie on Notting Hill, and he was watching on an old tube TV. And just got me thinking, like, God, I can't believe we used to watch stuff My first apartment out of college, I had an old Zenith TV. Tube TV was probably 19 inches. How did people used to watch TV on these things? No HD, no widescreen.
We spoke about this maybe a year or two ago. I was watching Funny People, which I think was like 2011 or something, 2009. And they referred to a TV as a big screen TV. Like it's only in the last 10 years that we stopped calling them big screen TVs because they're all big screen.
That's true. Because like a handful of people you knew in your life would have a big screen TV.
And they were rich people.
It was a mega thing, and now everyone has one.
They were rich people. Speaking of Notting Hill, which I agree is an absolute all-timer, you know the guy who played Spike, his dumbass roommate, is the mentor in House of the Dragon Season 2?
Oh, yeah. Okay. He's also the bad guy in one of the Spider-Mans.
He is? Oh, he's the lizard.
Yeah, he's the lizard guy.
That's right.
All right. Give me your Twisters review.
Speaking of Spider-Man, so Kobe loves Venom. Like he just got a Venom toy. He's like obsessed with Venom. And I showed him the trailer for the third one. And Robin goes, absolutely not. She's like, I'm like, what? Who cares? Like, think about
my wife always says that to me.
He's turning 8 years old. I saw like in the Mouth of Madness.
You saw Field of Dreams when you were 3.
True. I saw Freddy and Friday the 13th when I was like 7 years old. Probably not ready, but I did it. No big deal. So it turns out that Venom is rated R. What are your thoughts? Are you going to take George to see Venom? I feel like he might be. 7 years old that's pushing it.
We've never tried Venom. He doesn't get into the superhero stuff he did like Spider-Man back in the day, but now it's all natural disasters and like over the top action for him. So I asked you, could I take him to see Twisters? Because he saw the preview for Twisters and that's it. That's all he's been talking about all summer is he wants to see Twisters.
Yeah, so Twisters was exactly
my guy, Glenn Powell.
Yeah, no, he's so hot right now. It was exactly what you want from Twisters. It was perfect.
Yeah.
Tons of fun, great action. They shot fireworks into the Twister. That's not necessarily
Did you get any nostalgia for the original?
I actually saw the original on a class trip in 5th grade. Did I get any nostalgia for it? Nah. I mean, I think you can make the case that this was at least as good as the original.
Was there any throwbacks to the original movie?
No, not really.
Okay. I rewatched it recently. Still holds up.
Yeah, no, Twisters was a ton of fun. And it's doing big numbers. It did $80 million at the box office. And speaking of that, Mike Zicardi shared a chart with us from, again, another one from Torsten Slack, weekly movie theater visits. I'm saying we're pretty back, and I'm pretty bullish on the back half of the year. Oh, I'm not looking, you know what? I'm not seeing Wolverine and Deadpool. I don't like Deadpool. I don't think it's funny. I know you're a big Ryan Reynolds guy.
I love it.
Well, I
won't see it in theater, but I like it.
I hope it's a huge hit because they're counting on this. But yeah, I don't know. It just doesn't do it for me. Okay. Last week, Ben, I took umbrage with your saying that people are going to have nostalgia for this decade in a couple of years. We don't have economic nostalgia. You know what we do have? We have movie nostalgia. They're making a reboot of I Know You What You Did Last Summer.
Oh, really? Huh. Okay. Well, I guess they did it with Scream. It makes sense. Jennifer Love Hewitt coming back? Hopefully.
I don't know. I just saw Rotten Tomatoes tweet it. All right, 2 more. Speaking of horror, there's a movie called In a Violent Nature that is a Shudder movie, and it is a throwback. It's like Friday the 13th, Jason Voorhees. The difference is that I've never seen a horror movie this way. It's done through the lens of the killer. So you follow the killer, and there's one of the gnarliest, most grisly murders. Let's call it a kill scene. It's not really murder, because it is technically a murder, but murder implies that it's like sort of anything resembling reality. This is just a kill. It's not a murder. It's a kill.
You could tell me in 10 years time, there's going to be a big scandal and saying literally every horror movie that comes out now is created by AI because there's so many of them. Eventually, that's just what's going to happen.
Yeah. And last,
it's insane to me. You see a horror movie once a week now. It seems like
no.
They come out all the time.
Yeah. I saw this a few weeks back. I forgot to ask you if you saw. Did you see Challengers?
Is that the tennis one?
Yeah.
I did not see it.
It was good.
Is it out yet?
It's streaming. You can stream it. It was good.
Okay. All right.
A little heavy on the techno music, but it was effective. It was I feel like actually, how about this? Save it for your next airplane ride. I feel like it's borderline elite airplane movie. Like much better in the plane, in the air than on the ground.
That's fair. Okay.
All right. That'll do it. Animal Spirits at the Compound News. See you next time.